Casper, we're going to talk about the staffing sector branch. Interesting sector, always a lot to do about it when it's economically going bad and when it's economically going better. Let's take us in from a fundamental perspective into those companies. What companies are we talking about? Which companies are we talking about?
I think I want to highlight some important ones, and I think most people will know them. Adecco, Manpower, Randstad from the Netherlands, and we compared it in a sector with 20 different companies. Randstad is the biggest one if you look at the market cap, and I think, I don't know which country you are a resident or where you are, I think in every country you see Randstad.
Definitely.
They're quite big.
I think it's a worldwide player, yes.
What you see in the industry, the average return so far of the stocks is this year minus 6%. And if you look, and you're going to talk more about the correlation between some of those stocks in correlation with stock market and the economy. And I think that is really interesting what you're going to tell.
You see me look at my screen, right? Because I was just checking, you said Dutch company, but I had some sort of in my mind that it was also English, Randstad PLC, but that's completely wrong. That was okay. So that you don't think he's working whilst we're in the video.
But your conclusion at the end is really, really interesting. But first, a little bit deep dive into the sector. In the sector there are around 20 companies. On average, what I said, minus 6%. And if you look then at what I said, Manpower and Randstad and Adecco, they're all down. And the forecast for this year, so 2023, if you look at revenues and if you look at profits, are less than last year. So you are in a really negative sector.
Absolutely.
If you look at the outlook of the sector, it is expected that this will go down on average with 4%.
Also not the best place to be.
No, and what we said in the past, we talked a lot about other sectors, for example, copper or coffee. Then there are a lot of sectors with a positive outlook. If you look at the staffing sector, they're not performing well. But also the outlook on the short term is not good. If you look at the underlying drivers, then you see that there's a lot of demand for staff. And there is also, because of the high demand, the prices that they can charge are still high, but are going down slightly. So that's a fundamental driver. Are all those companies then performing not good? No, that's not true, because you have, for example, if you look into the sector and you believe in the sector, or you also always look at companies that have a strong performance and outperform the sector, there is one company, it's called HireQuest, and they have a positive return this year, if you look at the stock price. So opposite of almost all the companies. And also the profit and revenues for 2023 are expected to be higher than 2022. So this one is going contrary to the other sector. There's another one, Staffing 360 Solution, that performed this year very bad, but the outlook is very good. But those companies, if I were you, I will be really defensive with those. But a positive one is HireQuest. And the last thing I want to say about the sector is, I have a picture in front of me of Europe. And that shows over last year the temporary unemployment, young people with temporary unemployment, and young people are between 15 and 29. And then you see how darker it is, how more people you have with temporary unemployment contracts. Then you see 3 countries, the Netherlands, where we were from, Italy and Spain. And that says something. So if it's going the wrong direction with the economy, most of those people are sent to the exit earlier, because it's easier to do. So that's of course not good for the people, and also not good for the economy, because it's better for the companies, because they can act faster. So the companies where they work, from an economical perspective, the companies, for them it's good. But for the economics, it's not
interesting
good.
to see this also with the US, how high those percentages are. No, you think?
Yeah.
To give it a good comparison.
Yeah. So that's people should take in consideration, because within Europe you have a lot of, and that's what you also saw in the crisis of 2008. That in Spain the unemployment rate was really high.
Exactly.
Of course, more reasons, but one of the reasons that because a lot of people have temporary contracts and they can be fired or the contract can be stopped very fast.
Spain is extremely normal to do that.
Yeah. So again, for the
Unless
companies, it's
the government
good.
also put some measurements in here to avoid, to oblige companies to keep people employed.
So for me, a small summary: the sector is performing really bad. There are only a few ones, and I only saw higher requests that was really performing, outperforming, and also for this year, and also the outlook after that. But the sector itself is not performing well, and the forecast is not positive.
Not positive.
And what can we learn from that, Martin?
Well, what I did is I looked at two companies and I compared it to the S&P 500. I'll share with you in the screen some charts, and what I looked actually at two main moments in time. At today, because it's special today, and I looked at the Lehman crisis in 2008. And what is funny to see is that in this case Randstad, the largest market cap staffing or temporary employment company, started to go down already in September 2007, whilst the stock market only started going down almost a year later. It took a year longer for the stock market to react, and you see that at that moment. But not only Randstad, so it was not an incidental thing. Also, Manpower started dropping at more or less the same moment. I think what you saw is that unemployment started coming, or whatever you want to connect to it. But you see that those companies start losing value in the stock market. What we're seeing at the moment is sort of like the same thing. Randstad was touching almost the level of 120, and what you can see is that the market is already going down. Similar scenario as in 2008. However, if you zoom out and you put the S&P 500 also in this chart, so the same chart with the S&P 500, you see that the S&P 500 itself is still going up. So, and if you then zoom in further, you can see it a little bit more clear, comparable movements in the chart. So what can we learn from this is that it's clear that staffing companies are ahead of the market. They go down earlier, they expect something, there might be an indication, there might be a signal, whilst the stock market still is going on and on and on. And yesterday I looked at Jerome Powell and the Fed with their interest rate decision. They're going to maintain it, as you saw, at 5.25. But more importantly, he said we can do that because the labor market is still extremely tight. So there's still a lot of jobs out there in the US, but also in the Netherlands. Employment rates stay very, very low. Unemployment rates, to correct myself. And then it's actually surprising that these companies now already start losing. The outlook is so negative, as Casper just explained this, and the stock market is still going up. But I think it is interesting to follow this for the next 12 months, because what is going to happen with these companies, and also what is happening with the stock market. In the past, it has been proven that staffing companies going down will have, in a period of 12 to 24 months from the top of the market, basically when those staffing companies were, 12 to 24 months, the stock market is also very, very negative. So not saying it will happen this time, because every time is different, but keep an eye on it.
Yeah. So the sector is not performing well, the outlook is not good, and unfortunately there could be a correlation between this sector and the rest of the stock market, exactly, with a delay. So think about it. Sorry, it is not the positive,
no,
but you can also learn from this. You know,
yeah, it's about, you can take your, I mean, you don't have to sell all your portfolio now because you think it's going to go down based on this story, but keep an eye on it. Take it in consideration in your toolbox. Thank you for watching, and give us a